Welcome you to yet another monthly overview. We have a fair bit of ground to cover, so let's get started. Like in the last few months, what we are seeing is that the market is stuck, whether we are talking about Nifty or Nifty 500. We are sort of stuck in this range. So I just took this snapshot sometime yesterday. So this is not exactly uh, on the end of the month. But pretty much, I think we are in the same zone. What is driving this uh, consolidation uh, with a slightly negative bias is the relentless FII selling that we've been seeing for many, many months now. And we are also seeing a very strong DII inflow, so which is sort of keeping the tug of war going on. What is interesting about the overall markets is if you see the fall that we saw, so we've basically covered uh, a full year since we made the previous high, which was in September end last year. And if you see, we had a fall, then a recovery, then another bout of fall, then a recovery, and then again a fall, right? And then we saw a recovery, but this recovery did not go up to the previous highs. So we did not see a higher high happening, which is important concept in technical analysis. Then we saw the market sort of cooling off, and now we are stuck in this range. And again, another interesting thing to see here is that again, we are not able to get back to this intermediate highs as well. So structurally, if you ask me, the market continues to look weak. It is not definitely looking strong. And I think one of the main reasons, which obviously probably everyone is aware, is the continuous trade uncertainty around tariffs. So that is something which is making investors very nervous. Also, if you look at global valuations across markets, India has always been expensive and it continues to be expensive. And uh, previously, we were arguing that we were growing extremely fast, and that was justifying uh, the high valuations. Now our growth also has shrunk. Obviously, growth has shrunk across the world. So now the question is, does India justify the 2021, 22 times forward earnings that India has at a broad level? And that is, I think, where the dilemma is for the global investors. The primary market continues to be extremely buoyant. I think if you look, January was very good. Then the market sort of was weak. And so you see that issuances sort of tapered off. And again, if you just look at this, right, and you will get a mapping of uh, how the market overall is with uh, how the IPO number of IPOs that have come up. And it is just a one-to-one correlation between the overall market sentiment and the number of IPOs. We already have seen a fairly large IPO from Urban Company. Today, I was looking at the news and I saw that LG Electronics, with a mammoth IPO, is sort of probably going to come out in the month of October. And if that happens, that is going to be probably a 15,000 crore IPO. So you can imagine uh, uh, the kind of uh, liquidity that is required to support these kinds of large IPOs. So that, I think, is also another reason why the secondary market is sort of a bit tepid, because there is a lot of money which is getting funneled into the primary markets, into these IPOs. Where else in the world is a rally going on? I think the biggest rally that we are seeing is in precious metals. So gold has been doing extremely well. Silver has been doing extremely well. We've seen copper prices go up. Uh, One of the main reasons why all these precious metals, especially gold, has been doing so well is that when the world goes through a lot of uncertainty, when nobody is sure what is going to happen, then people start migrating towards assets which are more certain, where they are more sure of, uh, of retaining value. And gold, historically, for millennia, has been a storehouse of wealth. Uh, and probably for the same reason why you see uh, Bitcoin also picking up or had picked up. Again, because people wanted to move away from very from assets which were controlled by governments and central banks to assets which were sort of not controlled by them. So one of the reasons, like you see on the left chart here, is that central banks across the world have been buying and relentlessly buying gold. The chart on the right shows you that the expectation by these central banks on for the next 12 months, and everybody thinks that they will continue and probably buy more gold, right? And if you see this 2019, 20, 21, 22, and so forth, and last year it was 81% of the central banks polled thought that they will uh, raise gold reserves. Now that is up to about 95%. So that has been fueling a massive gold rally. This chart on the left is from the Wall Street Journal. It shows that gold has had the biggest rally in the last 45 years. Uh, the counter side to all this is uh, that people start hoarding gold when the future is uncertain, like I said. And most gold hoarding periods have ended with major economic downturns. Honestly, I don't expect anything different. I think the way the world is right now, global geopolitics, economics, the social backdrop is such that some point in time in near or the medium term future, we will see a major economic scare, whether it starts from the US, uh, it will most likely start from the US, or whether it starts from other place, or whether we see uh, more intensified trade wars, or we actually see a war, right, of a larger magnitude between, say, a US or a China through their proxies or directly. That is something that is going to keep investors, macroeconomists, people who are in the policy making domain very busy for the next few years. And I think at some point in time, we will see some kind of a problem coming from here, because the signs are all there. If you see the way US has started behaving, if you see the way China has started behaving, China is now trying to take over the mantle of the most dominant power. Uh, Whether that happens or not, it remains to be seen. And the whole thing is, in the last 5 years, last 10 years, a lot of uh, changes happened in China, especially if you look at the way they have focused on R&D, they're focused on building up their own technology, whether it is AI, whether it is defense. Uh, it's very difficult now to be uh, for any country to take on China. So increasingly, I think we are getting to that old bipolar world, one block with the US, the other with the Uh, Previously, it was USSR, now probably going to be led by China. And US is increasingly ceding space voluntarily and involuntarily, right? So again, this is a very, very interesting area. Maybe I'll do a separate video on just the news flows of what is happening and what I am reading into it. I'm not a macroeconomist, neither am a political analyst, but I just I'll try to read as much as possible in terms of what is happening and try to piece things together. And what I'm seeing is something which is really, really fascinating. And I try to then overlay it with what I've read and learned from history. The other thing that is unfolding in front of us is AI. And this forward on the left, I found very fascinating. This came as a WhatsApp forward. And it's that everybody in the corporate world is talking about AI. Uh, but ultimately, nobody really knows what is the killer app, how it is going to get used, what is going to be the really uh, big thing that is going to come out of AI, whether there is going to be any ROI for it. And if you see the AI-led capex is huge, whether it is investment in chips, and we've all seen what has happened with NVIDIA, whether it is data centers, power, cooling systems, server racks, you name it, and it's there, right? So huge amount of uh, tech spending is happening. And what we really need to see is how this unfolds, because what is the amount of the billions and the trillions of dollars that is being put into the capex of AI, unless and until it really gives an ROI to the investor who's putting it or to the company who's putting it, then you really are going to have a problem. And the bulk of the money is going in from the US corporation. So that's something that we have to really, really monitor and see how this plays out. Talking about semiconductors, I think India also is trying its best. We are taking our baby steps forward, the starting off with the very high end, in fact, the very lower end of semiconductor chip manufacturing. And obviously, we have to start somewhere. People who are saying, why are we not getting into the cutting edge? It doesn't happen that way. You start crawling, then you walk, then you run. And that's exactly how it will progress. It's very heartening to see that we've started making more and more components. So if you, in the mobile manufacturing space, so if you look at how, say, the auto ancillaries started and how they have grown over the last, say, 15, 20 years, that's a fantastic model, because you start off at the lowest end of maturity and then you slowly go forward. That is the same model we adopted in IT as well. We started off, the country started off as uh, body shopping IT services, then slowly getting more and more penetration into client accounts and going higher and higher up the value chain. And now we have more and more GCCs where, and of course, also critical components getting outsourced to the Indian IT services company. So it's a curve, it's a maturity model that happens over time. And I don't think it's going to be any different when it comes to semiconductors or for manufacturing for that matter. And I think this is one big opportunity area for us as a country over the next decade. And obviously, the picks and shovels is a very, very important theme for me. I've always liked picks and shovels because you may not know, for example, which AI will do well, but you know that any AI which does well probably is going to require a lot of power. And to get a lot of power, you need more power plants, you need more nuclear, you need more uh, solar, you need more even coal-based power plants. And if you look at the cost of projects sanctioned by the banks and financial institutions you will see that power is dominating it. Power is about 40% of all aggregate large project costs that's been sanctioned for this year. So obviously, power is a very, very important sector, and power and all its ancillary units. Uh, the Lastly, let me sort of leave you with ETF basket that IntelSense has come up with. Uh, the team was discussing two things. One, a very broad-based, diversified portfolio, something which will have exposure to Indian equities, global equities, gold, silver, some debt, whether it's the bronze, the bonds, or liquid funds. And at times, when a particular sector is doing well, have some exposure to that sector. Sometimes, when a strategy is doing well, whether it is momentum or value, then have some exposure to those as well. So, a very well diversified basket of ETFs, something which is suitable for people who are starting off their investment journey to build a base portfolio uh, and then start picking individual stocks after you create a base portfolio, or for those who have a large concentrated portfolio in equities, but who want a more diversified kind of exposure. So that was the thought process that the team had with this ETF basket. If you find this thought process intriguing, do check it out. It's available both as small case and as a standalone email-based subscription. With that, thank you and best and wishes for Durga Puja, Dasera, and early wishes for great Diwali. Thank you.